Okay, guys. I'd like to welcome you to your next chapter on forex trading, where we'll be discussing forex entry and exit strategies. Well, I have a channel that I talk about forex, all things forex on YouTube. You can subscribe to that channel if you want to actually advance your knowledge about forex. But yeah, today I'm going to teach you how to actually enter and how to actually exit on the forex market, and I'll be making a graphical example now. So yeah, guys, let's jump into a chart and show you graphically where and how you should be entering in a forex trade. So yeah, guys, let's jump into that. Okay, cool, guys. We're now on our forex chart, and on this chart that I've selected here, it's a daily chart. We can see that price is currently respecting structure. As you can see, it's resisting here and it's supporting here. So now you can see that this is an uptrend basically, and what you know, or what I've taught you, is that on an uptrend we're looking for buys. So in this situation, you are looking at price and you are looking at it. It's now at this point and it's failing to break this area. So now you're not sure if this is going to continue in an upwards direction or it's going to change direction. So again, how do we identify where to enter our trade now in this area? So as I taught you before in the chapter of structure, is that we basically look for the structure, or we look for how the market is actually respecting structure. That will basically determine the direction that we're actually going to be trading. So now this is an uptrend. We're looking for price to actually break here or break here. So if it breaks above and retests this resistance here, or this supply zone here, we know that we're going to be entering a buy. And if it breaks and retests on this resistance here, we're basically going to be looking for sales, because this is going to be basically violating a trend line here. Let me just draw a trend line just to show you what will have happened rather. Let's draw a line right here. As we can see, price action is actually it's being supported in the zone here. Let me quickly draw that. Okay, let's just put it here. Price is actually being supported there on this supporting trend line. Let me just draw it properly here, guys. Okay, cool. Let's just say price is now supported on this trend line here. Because it's been supporting here for quite some time, we actually expect it to shoot up. Now there's something like this. This is a consolidation that's happening here. So we don't know if price is going to continue to shoot up or price is going to move in an opposite direction. So the only thing we're waiting for is the break of these two levels. These are basically going to guide us on the direction of the market. So if price action breaks above here and comes back to retests, then it's going to shoot up. Obviously, we know that. And if it breaks below this this trend line here, or this supporting line here, if it breaks and comes back to retest, we'll be expecting the price to be changing direction and shooting upwards. So let's basically play this and see what's going to happen to the market and see how we'll be trading in this instance. So the market moves, and as you can see, guys, the market broke. It actually broke this support line here. I mean this area of structure here. It was broken, it violated it, and it came back to retest. And we can see that it's retesting, judging by the wick that's been created here, because when price moved down, I mean buyers in this areas pushed the price up. We can see that by the wick that's been created on that candlestick. So as a trader, we will be entering a buy in this area, because now we actually anticipate that the price will now be moving in an upwards direction. So let us enter a buy right here. As you can see, we came in with our buy in this area here, and our stop loss should basically be in somewhere here. we could basically put our stop loss in this area. But if you're one of those cautious trader, you could put your stop loss below this area of structure that has been retested, or you can actually put your stop loss on your second structure here, depending on the amount that you have on your trade or the percentage that you're trading with. But we'll discuss that in our risk management chapter. So those are the areas that you would basically be basing your stop loss on. But me, I would rather put my stop loss here because I like stops. And your take profit, you would actually put your take profit wherever you find that your risk reward ratio is actually suitable for you, or the price. But we'll learn about risk management somewhere along the line. So that's basically how you'd enter. So let's just quickly play this here and see how this thing would have played out. So as we can see, price it retested and it's moving, and it hit our take profit in that area. So that's basically how you would be trading, or how you would be finding entries using the strategy, break and retest, then you enter. So yeah, now you know when you should be entering on a chart. You must always enter on the break. You must always look for the break and retest, then you should enter on the retest. Now when you are entering on this retest, you're basically not just entering on instinct. You are looking for certain candlestick patterns that have basically been showing up, or that will actually be forming on these areas of entry. Excuse me, guys. My English is a bit bad, né? But yeah, let's quickly talk about these candlestick patterns that we need to be looking for in these entry areas or entry zones. Okay guys, in front of us we have a chart of the most powerful candlestick patterns. I like to say these are the most powerful because most likely when these candlestick form on a chart, price is most likely to move in that direction. As you can see, this is a hammer, this is an inverted hammer, this is a hangman, this is a shooting star, this is a gravestone, but it's a gravestone, sorry. But all of these ones that I just mentioned, I like to call them pin bars because of the pin that is formed on one side. So every time I see something like this, instead of trying to identify individually what the name is, I just call them the pin bar because the name is not really going to help me in making profits on the chart. So yeah, these are basically the ones that I use. I also use the bearish engulfing pattern and the bullish engulfing pattern because these are the most common ones and they're probably the most powerful ones. But I wouldn't say that they're most powerful because all of these are powerful because every time they happen on supply and demand zones or on support and resistance zone, price is most likely to move in that certain direction. So when using these candlestick, when you see any of these candlestick forming on your entry levels, just enter into the direction that you've been anticipating. So these are the candlestick that you need to be looking out for on your forex chart. Don't just enter anywhere. If you see these forming just at random, don't enter based on those formation. You must have rules for your trading. So if you know that you are entering on break and retest, that's where you should be looking for these candlestick formations. If they just happen to form in the middle of nowhere, you disregard them because they are not going to be aligning with the rules of your trading strategy. And this is the strategy that I'm actually teaching you in this course. So I want to just quickly jump back to the example that I was showing you about the entry levels and just basically see what type of candlestick formations that have been forming in those areas and basically work using them or basically identify those candlestick. So yeah, let's jump into that and look at that quickly. Okay, cool. Looking at this previous example here, as you can see what formed after that breakout here. As you can see, price, it broke out in this area and it came back to retest. So now we were looking for this retest and we were looking for a candlestick formation. Look what formed here. This is a hammer. As you can see, the small candlestick here, if you're looking at the hand there on the screen, that is actually a hammer, or a pin bar as I like to call it. As you can see, there's a head that is small, and there's a huge wick rejection that came from our supporting area of our or on our area of structure. As you can see, price actually moved up, and that candlestick closed, and we know what happened after that candlestick formed. Price moved up, you understand? And as price moved, and it actually hit a certain level in the market, and it formed a different formation or a different candlestick pattern. But let's just wait right there. As you can see, let's pause it here, and let's bring it right back to that formation up here. Now, as you can see here, when price was moving up after it broke out in this area, what formed here? This is a bearish engulfing pattern. If you look back to those candlestick charts, you'll see this formation. There's a small green candle that is engulfed by a bigger red candle moving, indicating that the price is about to move down. If that had happened here, it would have been a small red candle that has been engulfed by a bigger green candle, and we would expect price to move in the direction of that green candle. So here, as you can see, price is most likely to move down, as we can see that forming there. I'll play. As you can see, price, it actually did move down, and again it formed another candlestick here. Let me just pause it right there. As you can see, it formed another candlestick here, and it actually moved in that direction. It wasn't a significant move, but it just indicates that these candlesticks actually do work. And as you can see, as it formed here, it created a level. Let's quickly draw that level of structure here. It created a level, indicating that price is most likely to move in an upwards direction. You understand? Let me just draw that level there, right there. And now, as soon as you see that thing forming after a long move like this, you know now, okay, yeah, this is a retest. I should be entering a buy. But in most cases, this won't be helpful in some cases. But you'll never know when you should be entering or not entering in these zones. That's why you need to be looking out for these types of setup, these break and retest. But sometimes they don't work out as expected. But more often than not, they will work out. So yeah, guys, that's basically it on candlestick. I hope all of what I've been teaching you did make a bit of sense. Yeah, so let me just play this here. I just want to see quickly what's going to happen here, because I just drew a support level, and I drew a structural area that has been retested. So let's just play here and see the outcome of this market. So market plays, it respects this structure. Here there's a formation that's being formed. Sometimes, guys, I'm going to be teaching you about breakouts in just a short while. Here there's a formation that form. You might ask yourself, but Mentor, you said that you must enter on support or on a retest of a structural break, but this time price is not moving in a certain direction. Okay, cool. Let me just quickly show you something here. This is something I'm going to be teaching you below. It's just something it just caught my eye here. Let me just one moment. What's going on now? Okay. Basically what is happening here, there's something called a triangle formation that is actually forming right after this retest. And with those triangle formation, those are different types of trading setup. These are also the things that you need to be looking out for. So a triangle actually formed after that retest. So once you see something like this on the Forex chart, you basically don't jump into any entries. You basically wait for a breakout. So in this case, this triangle, it actually formed what's going on now? Okay, cool. As you can see, there was a triangle that was being formed here, and it's a nice example because it's quite a rare example on these tutorials that I've actually prepared for you guys. So as you can see, this triangle, it formed on an area of support, you understand. So technically you should be buying in this zone, but because of this triangle formation, let's say now for instance you've already entered here after this retest and something like this forms. So if something like this forms, you need to adjust your stop loss or your take profit accordingly, so that you can get stopped out at the right time. So when a triangle like this forms, you simply wait for the breakout of that triangle and enter on the direction of that breakout. So if this breakout was on the upside, we would have been entering a buy, but instead this breakout was on the bottom side or on the supporting line of this triangle. So now because this breakout occurred, we enter a sell here. I know this might be a bit confusing, but you'll learn more about these down the line. But for now, stick to what I've told you, but we'll talk about all these breakout patterns down the line. So what would have happened here if this thing had broken out? Now I would expect price to go down, and just like that, price comes back to retest the triangle. It retests. Where is it going to go? It's moving and it's choosing a direction. Let's see. Let's just wait. These things, they do take quite a long time to form. But yeah, as you can see, after that triangle broke, price action just basically moved to the downside. So these are the type of things you need to be looking out for, these certain types of formation, because they can actually interrupt the way the market or the setup is actually moving. So yeah, guys, that's basically it for today. I hope you understood the whole concept of what I was trying to teach you today, and I hope you understand and go and practice it on your demo account. So every time you learn something, you must give yourself an opportunity to go to your demo account and basically find 100 setups based on each section that you've learned. That's the only way you're going to grasp the concept of forex trading, and that's the only way you're actually going to nail every information that you're getting from this course into your head. Yeah, guys, that's it. We'll be talking about moving averages on the next chart. On the next lesson, sorry.